Thanks, Rolly. Appreciate the kind introduction. I want to thank everybody for being here today. Before I get started, can everybody hear me okay? Just type a Y in the chat box so I know you guys got me coming in loud and clear, and that way we can get started with the webinar presentation. Glad to have you guys in here. My hat goes off to every one of you guys that have stuck it out for the entire day. I'm assuming you've probably got a little bit of information overload. So what I'm going to do is just mention right off the gates, I've got some links I'm going to be providing you here. One of my support specialists, RJ, is in here, and he's going to be putting some links in the chat box, mainly on some of our testimonials from some of our traders that trade with us on a full-time basis. I'd also like to put a link of a trade that I took in crude oil in our trading room this morning. And then just to mention that this is part one of a two-part series. We're going to be holding part two tomorrow because we're going to be spending a lot of the time today going over the foundation of our frameworks, our indicators, our trading system. And then once you see the exact tools and the way we piece everything together for a trading system, that way tomorrow I'm going to be spending all of the event on essentially all the metrics. I mean, most of you guys in here have trading goals. I think it's important to look at metrics, and that way you guys can see some statistics and some of the information most of you guys are looking to accomplish. Now, before I go any further, guys, I needed to cover a quick disclaimer. We have no financial interest in the outcome of your trades. There is substantial loss when trading securities, so you need to determine your risk tolerance to trade them. Our products and services are for educational purposes only, so any of the market recommendations, any of the trade examples, the backtest results, the trading logs of myself and any of the students is not to be construed as investment advice. Past performance does not guarantee future results. Now, I know you guys have seen that before, but I need to put that in here before we go any further. Now, why don't we do this, guys? I have an agenda I'd like to cover. Before I can go any further, I'd like to get RJ, can you please put the link for today's crude trade in the chat box? We have a YouTube video I put up on our channel today. That was a trade that we took live in the room. I think about 80% of the traders took that this morning. I'd also like if you could put the testimonials link in the chat box so that our traders in here can actually watch some of the videos of some of the traders that trade with us full time. And that way we can go and we can move a little further. Let me just see here. Perfect. So the first thing I want to do, guys, I'm going to cover a quick breakdown, my credentials, a little bit of my biography, a little bit of where I've come and where I'm going, and give you guys a little bit of breakdown of who I am as a trader. I'd also like to touch base on some very important questions. What system, what setup, and what market do we trade? I think it's very important to identify that there's a lot of very good resources out there for trading systems, and there's a lot of good resources out there for software and trade rooms. But that might not resonate with everybody at the same place and where you are in your trading journey, right? Maybe you guys could give me a little bit of information on yourself before I go any further. What are your trading goals exactly? I mean, why are you guys looking to trade? Are you looking to replicate a consistent income? What is your daily profit goals? What are you guys looking to trade? I mean, maybe you guys could type that in the chat box so I get a better understanding of who you are as a trader, maybe why you're here and what you're looking for. Essentially, because trading means a lot of different things to a lot of different people. So basically, if you guys could type that in here, I'll take a look at that as we go on with today's webinar. The next one I want to break down is the C's of the markets. A lot of traders are unaware of what's actually driving the market. And if your trading system and your tools that you're using are not derived off the constants of the market, then what happens is you're trading at a disadvantage or you're trading blindly. And we're going to be showing you exactly what our system's been broken down into different components so you understand that every aspect of our trading strategy and our indicator suite with our system is derived off the constants of the market. Now, I'm going to be going through our software suite. We have a combination of a couple different products that we use that make up our entire system for semi-automated and discretionary trading. And through this, I'm going to be showing you a demonstration of a trade on the NASDAQ. I'm going to be using Market Replay and showing you some of our softwares with our layouts on one of the workspaces. And then I'll show you another demonstration for those of you that are interested in coming to tomorrow's event, because we're going to be spending most of the time going over performance results, backtests, trading logs, and we're going to show you an example of an automated entry for tomorrow as well. Now, I'm going to be showing you where you can sign up for a free video trading course. Also, you'll receive a free indicator for signing up on our website. Maybe, RJ, you can put our website in there now. If you go to our website at goldenzonetrading.com, You'll be able to sign up on our main opt-in, which will allow you to receive these indicators, receive these courses, and you'll also be able to stay in tune with regards to the webinars we have on play for you guys, as well as getting a guest pass to our trading room. Now, at the end of the event, I'm going to be giving you guys a link for tomorrow's event. I think it's very important that if you're somebody that studies statistics, you're interested in winning percentages, risk and reward metrics, you want to see profit, and you want to see trading journals and logs, to me, that's part of the due diligence process. And as a trader that's looking to either join a trading community, purchase software, be a part of a trading room, all of that stuff, I think it's very important to cover that rather than just jump in and buy software and training programs. So with that being said, guys, who am I? Right? My name is Sean Kozak. I have a motto in this business, and essentially that's, I'm not big on fluff. I don't like snake oil, and there's no room in trading with regards to subjectivity. I spend a lot of time testing, statistical testing with our strategies, and a lot of our traders keep journals and logs and metrics. I study them. We work with our traders in breaking the cycles of negative patterns that have kept them from becoming successful traders. If you want information on my success, send me an email. I'll send you my trading logs. You want success of the student, send me an email. I'll put you in touch with our traders. They can talk to you about what they're experiencing from trading. There's no closed doors with what we do with regards to the Golden Zone trading framework. So hopefully if you guys are interested in that, you'll follow up with me, because that's the funnest part of working with traders, is being able to put your money where your mouth is, right? I think that's the most important aspect. So I used to work in oil and gas, great money, great income. Didn't think it was a lifestyle for me longer term, so I left and I did a degree in finance. I wrote my broker's license in Canada, and rather than working for a registered firm under IROC, which is our registered legal body in Canada, I became an independent trader. I've been mentored by former order flow and market makers on the CBOE and the Chicago Merc, and I had the privilege of working in a private independent prop firm in Toronto, Canada. One of the best experiences of my life was essentially working with these traders, being side by side others traders that are very successful, and it helped me develop very quickly, and it helped me achieve the success that I've been able to achieve very quickly, because I wasn't always a successful trader. Like all of us, we've always hit roadblocks, and we've always hit a place where we have to either make a decision as to either stay stuck or change what has to happen. And I had to do a lot of self-assessment, and hopefully some of you guys are in that same process as well. Now, I've been an global assets trader for over 8 years, and as the founder of Golden Zone Trading, the success of our programs, the success of our strategy and our software is not anything short by a combination of very highly qualified teammates, right? I have great programmers, myself and our support staff, we're all traders, right? So anybody that's working or trading with us, you're always in tune with people that are not just hired to answer emails and essentially be there as a sales pitch. We're traders first, and then we provide what we use ourselves to the community, right? So I am the Director of Business Development for Shark Indicators. One of the reasons why I work with them is because they're one of the best add-on products in the business. I use their software products in our strategy and our trading room. Most of the people that are presenting here today are partners with Shark Indicators. The Bloodhound software has been incremental in testing and building discretionary and automated systems for a lot of the vendors here today. And working with this team has helped me provide products to the trading community that has been exponential in the growth of our traders. So that's a little bit about myself, guys. Hopefully you guys have some questions. I would encourage you guys to get in touch with us after the event. Let's get started. So when we're looking at trading, right, we have a choice to make whenever we trade the markets. And the reality is that we have to remain dynamic, because it's very easy to take a strategy and to just assume it's going to do something every day. A good example of that would be today's environments in the market. With the Euro crisis going on and some of the stuff that's been taking place from a fundamental aspect, it hinges on the expectation of volatility in the marketplace. With this in mind, we need to remain dynamic. When it happens, right, it's very common for us to be able to take very clean setups and be able to ride the market when it's moving with a lot of volatility or volume. But how many of you guys have ever taken a trading system or a strategy, purchased it from a vendor, or maybe been in a trading room and basically you know, it works really good, and then all of a sudden you just take a whole bunch of losses because you don't have rules or selection processes in place to keep you out of the market when the market's not moving. Anybody ever been in that position here where, you know, you make money on a day or two and then all of a sudden, you know, you have nothing in place for you to be disciplined or strategic when the market's not moving the way you need it to? You know, one of the things I always say in our trading room is we do not come to the market, we let the market come to us. Right? So what I'm referring to is, how do you trade when the markets are doing this? Right? When the markets are not strong trending, when we're in a state of confluence and things are not always moving and lining up for you. We need to know when to be dynamic so that when the markets are changing and the volume is dropping and the volatility is dropping, the key here to understand is, you know, how do you trade that? How do you actually come in and have the confidence to be able to say, wait a second, I know how to actually dissect market information and make sense of every day as a different piece of information, because we all know that never is there ever going to be one single day in the market that's exactly the same, right? And if you know how to be very disciplined and know your system, know the setups, you can be dynamic with whatever the market throws at you, which in essence, you're not relying just on the software, you're relying on your skill sets that you develop, right? And that's really what makes a really good trader a profitable trader, is because you can have a very great trader but a lousy system, and your trader will not make money. You can have a really good strategy and a lousy trader, and you're destined to fail. The key is to take a very sound trading system and an edge and combine it with a trader that's willing to develop their skill sets to become an excellent trader. You combine that, my friends, is the holy grail. It's taking a really tested and profitable strategy and combining it with a trader that's actually willing to advance their skill sets. To me, that is long-term expectancy, right? So being dynamic in both trending and oscillating in range-bound markets is really what we need to teach you how to develop. Now, one of the things that we do, and this is actually really interesting, this is actually a free indicator that you can get on our website. You just sign up at goldenzonetrading.com. It's going to help you understand that it's not just about the setup. Too many traders are focused on, where do I take the entry? You know, where am I trading? What is my setup? Too many traders are not focused on the market that they're taking that setup on. And the reality is that we use a tool that's very simple. It helps us map out correlation analysis, and it helps us identify which market we should be participating on at that exact time. Because we trade 7 markets, I believe 7 or 8 markets in our trading room, right? And we might have a setup on the NASDAQ, the Russell, and the YM all at the same time. How do you validate where you want to put your capital, right? It's not just about using software to show you an entry. It's about understanding where you want to take that entry on what market that's going to increase probability, right? Because when the markets are all bullish, and in this example, let me grab my cursor so I can show you exactly what I'm referring to, is that let's say all the markets are moving to the upside, okay? At this point in time when I was taking the screenshot of this example, the Russell was the strongest market. Therefore, buying the Russell on the demand or the opportunity that were presented with our system and our setups would be higher probability than trying to buy the ES. Because right now the ES is going up the slowest. Therefore, if we're long the ES rather than the Russell, you're going to have a harder time hitting your targets than trying to buy the market with the most buying strength. Now let's flip that over. Let's assume the markets are all selling off. We do not want to be shorting the Russell, because the Russell has the most strength. We want to be shorting the market that has the most weakness. And we look at this as a market selection process, so that when we're seeing our setups on our trading charts, when we're seeing the strategy unfold and we have all the rules lining up for a trade, we also have the ability to pick which market we want to participate on first, so that we can essentially pick probabilities and line them up with our application for the setup. Now, where this is leading to, guys, let me just kind of show you where I'm kind of bridging this into, is because if you're going to identify the market to trade, you need to understand what's actually driving the markets, right? Because it's not just one factor that's important in looking at a trading system. A trading system has to be a combination of other things unfolding that are actually driving the market. Now, the first constant that is always true in every single market is time frames. Fractals, understanding that the market is made up of very different lenses, right? And it's all hinged around your ability to understand your trading temperament. If you're a high scalper, your fractals are going to be small. If you're a swing and position trader, your fractals are going to be large, right? It's all relative to your temperament and your trader type. So time and the way we look at the market, whether you're looking at range charts, volume charts, time-based charts, it all is the same, whether you're trading futures, forex, stocks, option, bonds, you name it. It all operates on different fractals, right? So multiple time frames is a very big component to understanding the constants of the market. No matter what you're doing, it's always going to be a factor. But what's even more important is when you take fractal analysis and you combine it with what's really driving the market, right? If you were to go down to the Mercantile Exchange or the pits down in Chicago, essentially what's driving the market is the auction process. The auction process is an accumulation of how many buy orders are paired with the sell orders, and the job of a market maker is to pair those orders, right? Remove the screens, remove the mentality of, these custom bar types and these flashy signals. Get right down to what's really driving the market, right? And the reality is it's order flow. Order flow drives the market between the buy side and the sell side of the marketplace, right? Now, guys like you and me, right, we're small potatoes in the bigger scheme of things. That's just a reality. But the order flow of the market and the bigger players are evident. So supply and demand is just a term that's used to break down the economics of the market. But what's more important is understanding where supply and demand order flow is supported by participation, which brings me to the next constant, which is volume. Right? Volume is just the measurement of participation. But what's more important for us is the participation at areas where order flow is important. Now, market structure, okay, is a constant that is derived of the decisions between you, me, and the other million traders that decide to buy or sell the market. When you draw a trend line on the chart, that's because the buyers and the sellers have created runs and retracements that have created the valleys and the peaks for you to draw that trend line. Those patterns of buying and selling in the market create market structure. So the last one here is also momentum. And momentum is the speed in which price moves, the velocity of price movement. No matter what is taking place, no matter if you're trading futures, currency futures, index futures, forex, stocks, bonds, every instrument that you trade is going to be derived of these constants. This is very, very important because if you're trading a strategy or a system that is not derived off the constants that are moving the market, then you're always trading at a disadvantage to something that other more experienced traders know. And it's not to say that you're doing something wrong, it's just this might be the first time you've ever been exposed to it, and this is just the reality of what's moving the market. Now, the nice thing to understand is that our entire software suite, our trading system, and our core strategy was pieced together one aspect at a time and built by combining all of these constants. MTF, Kay is asking, what does MTF stand for? Multiple time frames, okay? So knowing this, let's break these constants down into our software products, right? The first one is the product known as the SD volume zones. This is our main aspect, and it's looking at order flow and volume profile. It's using leading analysis, so we're able to plan our trades in advance because we're able to forecast price areas that have order flow and balance that's supported by volume profile. The key here to understand is that our supply and demand zoning software is not just standard supply and demand levels that are support and resistance driven, right? These are order flow levels that are looked at based off volume profile and order flow distribution. Now, one aspect that's inside of our zoning software is looking at color-coded bars. And really these bars are actually color-coded based off order flow and volume. And so what I'm going to be showing you here is what these bars look like, but the purpose to all of this is to be able to learn how to read a price chart and be able to identify where to see the market as being either cheap or expensive. And as I mentioned, the market is an auction process. Picture this, if you're in the shoe business and you are buying shoes and you're selling shoes, you want to buy shoes at $1 and sell them for $5. And if you're a retailer, you want to sell them for $5 and then buy them back at $1 because that's the way you make money in business. Financial markets is the same thing, guys. It's our job as a trader to look at a chart and identify where is the market expensive, where is the market cheap, and where can I identify that in advance so that when I participate, I can plan everything before it happens. That's being a proactive trader. If you're always acting on an indicator to tell you what to do as it's happening instantly, you're reactive. You're always being reactive to the market, and you'll always be late, or you're always going to wait for lagging information to tell you what to do. What we do is different. We're proactive. What we're able to do is we're able to look at a chart and identify where we would identify price to turn. Why is it turning there, right? The key here to understand is that supply and demand is the terminology that breaks down the order flow. But the nice thing about our zoning software is that it's projecting order flow that's supported by volume profile distribution. So let's put this together. We've got a couple red zones on the chart. We've got a couple green zones on the chart. We've also got fluorescent bars here. You can see these red bars and these fluorescent green bars. And you've also got black candles. What our software is doing is it's basically doing a two-step process. The first process is identifying a black candle. A black candle is going to tell you, wait a second, there's a buy and sell distribution that's taking place between order flow and balance. As soon as that black candle closes, the next thing that has to happen is we're either going to get a green fluorescent candle or a red fluorescent candle. What those candles are doing is it's looking inside that supply and demand distribution, and it's looking at volume profile distribution. If the buyers can break volume profile outside of value, we will close a green thrust bar right here, and we will print a volume zone. Same is true over here. If we have a couple black candles, that tells us that there's a supply and demand order flow distribution. As soon as that red candle closes, that tells us we had strong enough selling to break outside of volume profile distribution, and we will print a sell zone. Why is this important? Because if we're trading over here and then all of a sudden the market rallies, we have the ability to know in advance if price comes down to those areas where we would expect the market to be cheap and why it's cheap. It's because buyers told us that it was supported by volume, that there's an order flow distribution here where demand is greater than supply. Same thing up here. We have an order flow distribution where it tells us supply is greater than demand. And all of these zones are derived from both order flow and volume, right? Now, why is this important? Because now we can identify on a price chart where the market is expensive, and if price comes up to an area, we should expect there to be sellers, and where the market is cheap. If we come down to an area, we should expect there to be buyers. Who do you think is actually selling down here into this area of value, right? The key here to understand is that inexperienced traders are going to sell the market, and what's going to happen is professional buyers are going to buy against an inexperienced short seller, because inexperienced sellers are going to always trade against experienced traders. And if you're an experienced buyer down here, you need an inexperienced seller to sell against you. You have to take the opposite side of someone that doesn't know what they're doing. Unfortunately, that's the nature of the business. I know that sounds a little cutthroat, but as you get better as a trader, our job is to trade against those people that don't know what they're doing. My job as a trade room moderator and a system and educator provider is to teach you how to become an experienced trader, right? Exactly. Buy wholesale, sell retail. But it's easy for you to put that in a price, or it's easy for you to type that in a chat box and say, well, we should buy low and sell high. I challenge the community of traders out there to really look at a price chart and be able to do that consecutively over and over and over again, okay? These are not time-based bars. These are range charts, Brian. Okay, so we trade our system on range bars because they're volatility driven. Let's break down the next aspect of the system, because I have a few things I want to show you, and then I'm going to show you some examples. The next constant is market structure, because the first two constants we're looking at order flow and volume. Now we're looking at market structure. How do we know what market structure is and what it is derived from? How many of you guys are using Fibonacci in your trading, or maybe been exposed to Fibonacci in your trading? Anybody in here using it? Just type a Y in the chat box if you've looked at Fibonacci, you're interested in it, or you've done studies around it, or maybe you're looking at it and so forth, right? Fibonacci is pretty complicated. It's pretty tossed around there very openly in the industry. You could easily use a fib retracement or a fib extension on the platform for NinjaTrader. But what we're more concerned about is variations of Fibonacci. I'm more concerned about variations on multiple time frames of Fibonacci, because using just Fibonacci on one time frame is only relevant to that time frame. I want to know if there's confluence in Fibonacci, because this is going to stack the odds drastically at those levels of support and resistance. So what we do is we use a tool called the Golden Fibs, and it looks at 6 variations of Fibonacci zigzags, swing highs and lows, retracements, expansions, projections, measured moves, and it's looking at it over multiple time frames. Now, the reason it works so well and the reason why we use it is because Fibonacci acts kind of like a self-fulfilling prophecy, right? The more people that are using it, the more weight it has in the market because it's going to be relevant to more traders. But the key here to understand is it's just not on one time frame, right? What we're doing is we're going all the way up to daily time frames. And if we're trading on a small intraday chart, our software is projecting confluence between 6 measurements of Fibonacci, bringing them all together and basically identifying only the strongest levels of support and resistance, right? Because one of the biggest components to support and resistance is making sure that it lines up over multiple time frames. If you're just looking at structure on one aspect of time, you're not paying attention to the influence of bigger fractals in the market. Right now, we use this in combination with our zoning software because we need to piece together the constants of the market. We need the zoning software to tell us where price is going to turn that's supported by volume. We also need to understand, is market structure going to support our decisions for entries and exits? Let me show you some examples, okay? This is an example of Fibonacci confluence. Every one of these blue lines are support and resistance levels. The key here to understand is that these are 6 variations of zigzags and sequencing of Fibonacci confluence, but it's derived all the way from a daily time frame down to intraday charts. So what we're able to do is say, okay, well, if we're looking at zoning software supported by volume to buy or sell the market when we're cheap or we're expensive, where can we combine that with the market that's telling us we're at support or resistance as well? This is an example of a buy signal for our zoning software. We want to buy at value when the market tells us we're cheap. But you can see here that we also have Fibonacci support lining up right at the same place as an order flow volume zone. We can also use Fibonacci as a target. It's very important for us to know where the market is most likely to go against us when we're in a trade. Another example for this would be if we're looking at selling the market for a short sale in an area of supply and volume. Is there resistance that's also there helping us on our trade setups? And where would we place our target so that we can identify where we're going to get out in case the market goes against us? The nice thing about the way we trade and the way we teach is that we do not just say, okay, I'm only looking for 5 ticks. I'm only looking for 20 ticks. We trade the market that's presenting us the opportunity based off what the market's doing. If the market's going to give us 20 ticks, we're going to take it. If the market's only telling us 10 ticks is likely, we're going to take 10 ticks. Because we do not just put fictitious goals around what we want out of the market. We trade the facts of the market. We trade the order flow and the structure, right? And this is really going to help you become dynamic so that you can place your targets and your entries and your stops in the proper location based off order flow, volume, and market structure, okay? Let me take this one level further so I could get into a demonstration. How many of you guys in here use momentum in your trading? Anybody in here looking at momentum? Just type a Y in the chat box if you're looking at momentum or if something like that has ever crossed your screens. I'm assuming most of you guys have been exposed to it. This is not just a MACD BB. Okay, I want to make that evidently clear. This is the velocity momentum indicator. What we've done is we've turned this into a hybrid momentum tool. Why is this important? Because if you're only using one aspect of momentum, then you're putting all your eggs in one basket. You're putting all your eggs in the frying pan. You're scrambling that at the same time, right? MACD BB plus velocity. Exactly, Mark. Exactly. The first aspect to this indicator is the histogram, the green and the red bars. This is a multi-time frame velocity cycles indicator. This measures velocity, the speed of price, and the reason this is important to us is this is looking at immediate momentum. This is looking at the fast movements of the buying and the selling and the velocity of that speed of change. Now the next component is the MACD. Why are we using the MACD? Is because it's a slow measurement of momentum. We're combining fast momentum and slow momentum, And we have a purpose for this, right? Because we need rules around why we're using such a tool in a trading system. If you have indicators on your chart and they look appealing to you, but you're not sure how they're complementing your system, then really what we're doing is we're just throwing darts at the board, right? Every tool we use in our strategy and the way we teach traders has a specific finite purpose. We have three purposes for the Momo. The first one is directional bias. We're always looking to trade in the direction of velocity in the market, right? We're not counter trend traders. We trade the direction of the market. We want to move with the market because we would want to take the path of least resistance, right? Now, the next aspect is looking at entry patterns. Momentum allows us to be able to identify aggressive and conservative decision making. The key here to understand is how many of you guys would identify you guys as maybe a trend trader? Anybody here consider themselves a trend trader? Right? Because it's important to understand if you're a directional trader, you want to make sure that you're trading the direction if you have momentum and velocity on your side. There's nothing worse than getting into a trade and all of a sudden the market goes against you. The key here to understand is that this is going to help you identify when to be aggressive and when to be conservative. And how do we do this? Through confluence. What we're able to do using the Momo is combine fast and slow momentum to determine whether or not fast momentum and slow momentum are moving in the same direction. If they're not, then we're in a state of transition in the market, right? Because a lot of times the market's going to fake you out. A good example of this would be, let's see this green histogram right here, right? I know there's some arrows going through that showing you the BBs and the bands, but I want to explain why this is so important. If we're looking for longs in the market and we have positive momentum on the histogram, which is immediate momentum, and then all of a sudden you can see down here MACD is still way down here below the zero line, okay? This is what we would consider fake out scenarios. The market is going to fake you out. The market is going to shake you out, most likely hit your stops. If you're in a trade and the market starts to go up and then all of a sudden you're in the trade long and then all of a sudden you get kicked out of the market and then 5 minutes later you see the market go in your favor, it's because you're not entering at the right time of confluence. Very, very important with regards to trade entry and decision making with regards to follow through. Okay, so an example of this would be confluence if you see that you've got the red histogram down and we're looking for shorts, and all of a sudden you see the MACD is also moving strong down. This is a state of confluence where we have both longer term momentum and smaller term momentum moving together. Right? Now, why is this important? Because this is going to A, help you understand directional bias, B, it's going to tell you when to be aggressive, when to be conservative, and C, are we able to make a decision before it happens? Right? This is very, very important. Now, how do we piece all this together? Because you guys have been here all day. God bless your souls. You guys have seen a ton of different things in terms of trading. I want to piece this together through a demonstration and spend the rest of the class showing you charts, walking you through the anatomy of the trade, explaining our workspaces, explaining the charts and what they're showing you. And we're going to use our software suite in combination with Bloodhound. For those of you that are not sure what Bloodhound is an add-on product that allows us to generate trading systems. It allows us to test those trading systems and allows us to choose whether we want to trade them discretionarily. It allows us to test those trading systems and allows us to choose whether we want to trade them discretionarily or automated. Okay, so let me do this, guys. I'm just going to go and show you some charts here. Let me just pull this up. Can everybody see these for a second? I'm going to walk you through each of these charts, what they do, why they're important, how we use them, and really teach you a little bit about a rules-based process. And this is going to be really, really important so you understand how we piece together the 4 constants. The first constant is time frames, right? We use 2 major time frames. We use a higher time frame chart. That's the chart here on the right. We use a smaller time frame chart. That's the chart on the left, right? Very easy to understand. Bigger picture helps us with direction. Smaller picture allows us to look at entry, management, location of participation. Okay? What we've done is we've built scanners that'll help make all of your decision making very simple. It's going to tell you when you're looking for longs, when you're looking for shorts. It's going to tell you when your time frames are putting you in an aggressive or conservative state. If it says conservative, it means to be patient. The momentum is against you right now for your trading decisions. If it says aggressive, these columns are going to change green and you're going to look to become more aggressive with your entry decisions, right? Why is this important? Because it's going to help simplify rather than looking at all the charts and trying to simplify the rules, making all of the decisions easier so that you can quickly at a glance look at what the scanners are doing and then go to your charts to help make a decision. Now, why did I choose the NASDAQ for this? This is a trade example that took place Tuesday this week. If you're interested in this day's trading, you could look at our YouTube channel. I put a recap there earlier. Let me show you. This is the free tool you guys can get on our website. The NASDAQ at this time, okay, second strongest market next to bonds. Bonds had a strong push up. I'm interested in buying the NASDAQ because the NASDAQ has more strength, right? Reality is I'm not looking to buy the Russell, the YM, or the ES at this time for this example because we're looking at all these markets in the trading room at the same time. Why is this important? Because I want to buy strength. I do not want to buy weakness. So for this example, the NASDAQ was the trading opportunity that I wanted to present to you guys here today. Now let me explain to you what we're doing. The SD volume zones, okay, is going to identify areas of value supported by volume. You can see price came into demand here, react very quickly, got a reaction, came back down, it's sitting here going sideways. We have supply and volume up here, we have demand and volume down here. We also have Fibonacci support and resistance that is identified, and we also have the Momo here, which you can see is in a state of negative momentum. But here's the important part. We're always going to trade with the bigger direction of the market. You can see here we have a long bias in the scanner, which tells me I want to be looking for long setups. I do not want to be selling the market. You can see here it says PM long. This stands for power momentum, and this is telling us that the higher time frame is very bullish right now. Very powerful momentum on the higher time frame. So if I'm looking for longs and the bigger picture is strong to the upside, my decision making is going to be on the smaller time frame chart. I want to buy order flow that is supported by volume, that is telling me where the buyers are. I want to be buying demand that is supported by volume distribution because I want to get in where the market's cheap and I want to sell where the market's expensive, right? Because that's what professional traders do. They look where value is and volume that supports that value, right? So how am I going to do this? Well, I'm going to pull market replay down here. And I'm going to just speed this up. This is market open, 9:30 a.m. Tuesday this week. Okay, you can see here we got a green thrust bar. What I need to happen is I want my area to open up. I want supply to be taken out by the buyers, and I want to find new areas of demand that's supported by volume so that I can look to participate because there's no fresh opportunity in here yet for me. Right? Our software is going to identify different color zones. It's going to tell you where you want to be trading and where you don't want to be trading. Right now, I don't want to be trading here yet because there's no fresh order flow for me to want to put my money into the market. Okay, let me speed this up a bit so you can see what I'm looking for. What I'm waiting for is I'm waiting for a black candle followed by a green candle. That's real simple, guys. I want a black candle that tells me there's an imbalance between buyers and sellers. And then I want a green candle that's going to tell me that we broke outside of volume profile so that I know volume supports the imbalance. Very simple to understand. I also want to see my scanner turn to an aggressive state because this will tell me that momentum has told me that I have momentum on my directional state of the market. Right, let me speed this up a little bit. So as I can take out supply, I can look for a new buying opportunity. Look how it's taking out supply here, guys. Look what it just did. Let me pause it. Took out supply. Sellers are losing the battle. That's not new information. We're in a strong uptrend on the bigger time frame. We would expect that to take place. What's really important here is how you now have the ability to put yourself into a state of proaction. Okay? What I mean by proaction is you're not getting in at the open or the close of a price bar. That's not how we trade. that's putting you in a state of reaction. If you're waiting instantly for an indicator to do something and you're waiting for something to cross, or you're waiting for an open to happen or a close to happen, to me, you're at a disadvantage. That's just my opinion. That's my experience as a trader, because that puts you in a state of reactiveness. What I'm more concerned about is how can I trade the hard right edge before it happens? Who in here would agree that that could be beneficial to learn how to trade what's taking place before it happens? And let me see here. I got a question. What do you mean when you said an imbalance between buyers and sellers? Well, at any given time, at any given price level, all that's taking place is that the buy orders are being paired with the sell orders. Okay? And when the buy orders become more than the sell orders, you're going to go up in the market. The market's going to go up. That's an imbalance. Right here, there's an imbalance because at that time, that black candle, the sellers tried to push the market down, but there wasn't enough sell orders to pair up with the buy orders. That's what we call an order flow imbalance. You could get real complicated and look at a footprint chart or the bid and the ask spread or the tape. We've done that for you inside our zoning software. All of that's been factored into the buy and the sell zones inside our algorithms, because we're concerned about that imbalance, but we want to make your charts very simple to trade. We want to show you very simply, we need two things to happen. Black candle, green thrust bar. Now what am I doing to get into the trade? Right, so take a look at this. I know there's buyers here. Why do I know that? Because the zone is supported by order flow and volume. I want to buy demand at value in the direction of the bigger move. I also now have an aggressive momentum environment on my scanner. Everything is lining up to the long side. Okay, let me show you what I'm going to do. I'm going to put an order in here. I'm going to look to buy the market at value. And I'm going to look, before I ever get there, where is this market likely to go against me? Because if I'm going to get into a trade, we need to have a rules-based plan about where we're getting out of that trade. And I don't mean based off of, I want 5 ticks or I want 2 ticks. I want to trade where the market's going to let me go. Because why would you want to take 4 ticks on a profit target when the market's going to tell you it can give you 20? Vice versa. If you're trying to take 20 ticks out of the market, but the market's only going to give you 10, you're not going to try and force something that's not likely. Right? So here's what I'm going to do. I'm going to look, is there anything in the way for me to expect this market to turn against me? There's nothing stopping price yet. There's no supply. There's no resistance. Let me speed this up here, because if price comes back down here, I want to buy this area. This is very important to me. Right? Let me speed this up, guys. Watch what happens here. Another black candle. Watch what happens. We've got support down here as well. We've also got a new demand zone on the higher time frame. That's really good news, guys. Look at how supply just stepped into the market. So if I get long this opportunity, right there, I'm going to pause it. Okay? Market's coming down into that zone. I'm okay with that. I would expect there to be a change in direction because there's an order flow imbalance here. And what that means is price comes down into a zone. This is where the buyers are more than the sellers based off what our software is looking at inside order flow and volume distribution. So why would I want to plan this trade? Because I want to buy the market as it's coming down to value, because that's what professionals do. They buy when the market's coming down and they sell when the market's going up. Inexperienced traders do the opposite. Okay, so let me show you this. Now supply has stepped into the market. This is a very good place to put a target. Why? Because if I'm long the market, this is where I would expect the market to give me hesitation. This is where the sellers have told me they are. This is sell order flow stacked by volume profile. Okay, let me speed this up. Stop loss is a couple ticks below the zone, because if it breaks this demand area, I don't want to take a large loss. This is the path of least resistance. If it takes out demand and the sellers take over the order flow, I'm okay taking a stop here because that's my max risk. Right? Now, obviously, position sizing is going to be a factor based on your account size, your risk tolerance. We have all that information to teach you how to do that properly. We'll explain that tomorrow. Right now, I just want to show you how we combine order flow, volume, market structure, and momentum for a complete turnkey system. I'm interested in selling up there at the supply for a profit target. I want to let the buyers come in here, and I want to see them take control of this position. Watch what's going to happen. There's profit target, stop losses at break even. Now it's time to trail the stop loss. All right, we have rules around trailing stop management. We have rules around how we want to trail our stop loss. I'm going to leave it here. I want price to take out supply, and I want to move my stop with the market. Okay, let me speed price up a little bit. We're going to use price action and support and resistance to tell me where to place my stop loss. Right? Let's wait for supply to take itself out. If it can't break supply, I'm going to leave my stop below support. I'm not going to move my stop just yet. I'm going to wait for supply to take itself out. Watch what happens. New demand. Let's say you didn't get into this trade, you missed it. New order flow presented itself, another buy signal. You can trade with the market with order flow and volume. We have an aggressive bias. Higher time frame is still in an uptrend. We trade with momentum and order flow. Watch what we're going to do. We're going to trail our stop loss here. We're going to trail it behind the previous candle's range and demand. I'm going to move this up. I would expect hesitation up here at resistance as well as supply, right? Let's watch what happens here. Okay, as it goes up, I'm going to trail my stop loss behind the previous candle's range. If it comes down and takes me out, great. We'll take the next opportunity. Right? I would expect there to be hesitation up here. This is where the sellers are as well as resistance. Does everybody see that? Let's wait and see if we can get another push. Okay, this is how we trade in the trading room. There's another signal. I'm going to pause it. Okay. We're going to teach you how to determine which trade setup to buy and which trade setup to pass on. This might work very well and give us 20 ticks. What's more important to me is understanding how to read divergence and the indicators to tell me that that's not likely to be a better trade setup. Does everybody understand that? This is the type of stuff we teach you in the trading room, right? So I'm going to leave my stop loss there, and that's the trade, right? That's why we're talking about which setups to take and which setups not to take, right? So let me do this, guys. There's a lot of information to understand about order flow. And there's a lot of information to understand about how to take a complete system and trade it profitably. I don't expect you to believe that this is the next holy grail until I've at least built some trust with you guys. As a trader and as a trade room moderator, I'm very big on metrics. I'm very big on statistical testing and giving you the proof behind what's going on behind closed doors. So rather than take any more of your time today in this webinar, I'd like to give you a link to tomorrow. I'm going to show you guys back tests. I'm going to back test our system over several markets. I'm going to show you my trading logs. I'm going to show you the trading logs of some of the students that have given me permission to share them with you so that you're not just looking at the logs of myself as a moderator who trades profitably and effectively in a system design method. I want to show you what our students are doing, right? And I'm not talking about just a testimonial in a video, which you can go on our website and watch. I want to show you the ups and downs, the drawdowns. I want to show you the aspects of profitable trading. I want to show you the metrics we're looking at, profit factors, win rates. I want to show you risk of ruin with regards to our strategy. Right, this stuff to me is very important. Right, so I believe Yana has put the registration link in the chat box here. I'm going to do it as well, just in case you guys want to make sure that it's there. Give me a couple hours of your time tomorrow, and if I haven't wowed you by that, then you can come into our trading room. What I'm going to do here is I'm going to give you a link to our trading room. Right? What I do in our trading room is I trade. You're going to watch me place trades. You're not going to see me talk about I'm in a trade. I'm not going to just talk about it and then you not see it. You're going to see me take trades in the trading room. Right? You're going to see me place live orders in the trading room. You're going to see me manage those trades. You're going to see me talk about why I took the trade, why I didn't take the trade. You're going to hear me talk about why we should take this trade over that trade, all of that stuff that is very important in the learning process. Because if you can't see it done in front of you, then how can you ever expect to replicate it? 90% of us are visual learners, right? Some of us can really learn well on our own, but the key here is to see it done in front of you. And obviously, we're at the mercy of the market volatility. Some days are going to be better than others. Some days we're going to take a whole bunch of money out of the market, and other days I'm going to teach you how not to take trades. Today was a great example of it. Okay, 90% of our traders in the trade room took one trade this morning, and it was on crude oil. I filmed it, 70 ticks. Okay, but we were patient for it. We didn't force outcomes. There was other trades that we passed on. This is the type of stuff that's important to us, and hopefully it's important to you guys, okay? So let me go back here. I'm going to cover one last thing before we shut the event down, okay? And move this out of the way here. Did you guys get anything out of that? Did you guys learn a little bit? Hopefully you guys enjoyed that. I know that you guys have been here for a long time, probably getting a little tiresome. We appreciate you being here. If you go to our website, goldenzonetrading.com, you're going to be able to receive a free indicator. That indicator is going to help you understand the strength and correlation of the markets. Many people have asked why I'm giving it away for free, because I think even if you're not trading with our system and you're trading your own ideas, that if I can give you a tool that's going to help you pick the right market to trade, then at least I've helped you some way, okay? If you sign up for the webinar, which is going to be tomorrow, I'm going to be talking to you about, to me, the most important aspects. Software is important, guys. Don't get me wrong when I say that. Software is important in making our decisions better, visual. It helps us take computers to make sense of a whole bunch of different information and piecing it together to give us an output. But what's more important is, can you take that software and that trading system and consecutively trade it following a rules-based structure day in and day out? Because if you're taking trades one day and then the next day it's not the same plan or it's not the same process, then how can you ever measure your expectancy? How can you ever measure your long-term sustainability? How can you ever be confident that you're going to trade out of a slight drawdown when you take a couple losses? Right? These are the things that I'm going to talk about tomorrow. I'm going to be showing you the difference between our value trades and our power momentum trades. I'm going to be teaching you the 4-step trading process for every single trade that we take. I'm going to be covering performance results for power momentum setups back-tested over the last year of trading data over pretty much every market that we trade in the trade room. Okay? I'm also going to be showing you trading logs for this year, last year, and some of the students that have given me the ability to produce that for you guys. And then last but not least, I'm going to help you understand how the enrollment process works for our mastery program. Our mastery program is a turnkey solution for all of our traders that combine all of our software together in a full system, full trade room, you name it, it includes everything. Okay? So if you want to talk to me, one trader to another, okay, then you can call me. That's my phone number. You can speak to me on the phone, leave a message. I will call you back. If you want to send me an email, you can do that as well. Okay. And let me just double check here. RJ is saying he's not able to post Yana in the room. I'm not sure exactly what he was trying to post, but I believe he was trying to post something. I believe I posted it as well. So did you guys get the link for the trading room? That's the biggest thing, as well as the link for tomorrow. Okay, guys. So yeah, exactly. She posted all my info. Great. So thanks for the opportunity to allow me to present our system and some of our information. Clearly, we don't have enough time to cover everything, so I look forward to seeing you guys tomorrow. The event is at 4:30 p.m. Eastern Standard Time tomorrow afternoon. That's where the magic is going to hit the roads, right? That's where the rubber hits the road for tomorrow. So I want to thank Rolly, Yana, all of the guys over at Trading Pub. I actually also want to thank all of the partners that have presented here today that are correlated with Shark Indicators. You know, we do a lot of work behind the scenes with that organization and bringing all of these companies to the market for you guys. And hopefully we've done our job servicing you guys as vendors in the trading community. So thanks, traders, and I hope you guys have a profitable morning tomorrow.